Hello out there in YouTube land. This is Ingrid Hernandez with the Explain It podcast. Caroline Kane, as you may know, has been doing the Tony Robbins setup. And unfortunately, she will not be with us today. She just let me know. But we will have an amazing guest with us, Amy Mahjoory, who focuses on raising capital. Couple of housekeeping things. Just remember, if you get value out of this podcast, if you want to make sure that your other fellow investor friends are getting all the value you are, please like and share this episode. We would love to extend the same value to them. In the coming year, Caroline and I will be focusing a little bit on the how do I get started real estate questions. So you'll see us transform this a little bit as we start doing more episodes with just Caroline and I. So that way we're not overburdening you with maybe very specific topics, rather get a little bit more focused on how do you get started with real estate, how do you get started with buying businesses, and then sprinkle in folks as they come around. But anywho, with that, I am so excited about having our next guest up. She is a rock star, a superstar, all kinds of stuff in the capital raising sphere. You may have even caught her on HGTV because she's that amazing. And I had the pleasure to see Amy at the Bigger Pockets conference, and she very sweetly agreed to come on our podcast because, as many of you know, when you're a mom, an investor, and a business a runner, an entrepreneur, you wear all these hats, or a wife, sometimes you have to draw lines of when you'll do stuff like this. And Amy graciously has agreed to come on here when it's generally like family time. So let's all give a warm welcome to Amy. Hi, Amy. How are you?
Doing great, Ingrid. Thank you so much. How are you?
I'm doing fantastic. We're so excited to have you on, especially because I feel like I've come to a place in my investing career where raising private money has become more and more of a focus. So
Sure.
I'm excited to hear sort of what led you to where you're at now, and then how folks can kind of get in your sphere, because I believe you have a mentorship around it. So
Thank you. You're so sweet. Your intro, I was like, stop, you're too kind. It was really good seeing you back in Florida. And it's so funny because when we were chatting amongst ourselves, I was like, that was such a great event, but we'll save that for another time. But yeah, I'm excited to be here and provide as much value as I can. So however you want to move forward is great with me. I don't know if you want to start somewhere specific. So just let me know how I can help.
Well, how did you find your way into raising private money? Because I know it's such a specific thing, and it's funny because I listen to a lot of like Alex Hormozy,
Sure.
and he talks about like when you focus on really broad, far-reaching things, your value actually is not as great. And I think an example of that was like, let's say you're a business consultant. Well, you're a business consultant, there might be a dime of dozen, but maybe you're a business consultant that like focuses on technical manufacturing. And then when you niche it down even more, technical manufacturing in the computer space, right? Well,
Mhm.
now your value goes higher because your focus of knowledge is so specific that now people are going to spend more money, or want to hire you at a higher demand because it's so niche down. So how did you find your way into raising private money, and like how did you niche your
Yeah.
way into the very specific focus?
Oh my God, I could answer that question for an hour. So what you just said, I agree. And it's crazy because once I focused and was super laser focused on just this one topic, because as you know, we do so many things, right? Like, so I had so much clarity, so much started coming together personally, professionally. So I totally agree with that. But some people know my story, many people don't. And I'm going to sound like that annoying person who just says I was just born this way. I never knew that I was good at raising money. It really was a natural skill set that I just had that I didn't realize I had until I started flipping houses 10 years ago. But
Mm,
I believe the foundation of that actually comes from my upbringing. So a lot of people don't know because I don't talk about this. One of my
mhm.
faults is that I'm a really good networker. People used to consider me like a networking guru, and Sean, my husband, hates that word. I wrote a book on the power of networking. It was published back in 2018 or 16 or 18. I don't even remember. But I was raised in a very crazy family dynamic. So I don't even know if you know this, Ingrid. So my mom and her two sisters married my dad and his two brothers. So three brothers from one family. People are like, was that incestual? I'm like, no. So three brothers from one family married three sisters from another family back in Iran. So I'm Middle Eastern.
Mhm,
They all got married, moved to the US, and then
mhm.
had kids. And so I have one brother, but I have five double cousins, and we all grew up within 2 miles of one another. And so even now at age 45, it's hard for me to call them cousins because we're like siblings. Like I have three moms and three dads.
Yeah.
So I had to learn at a very young age how to manage and navigate multiple personalities.
Mm,
Um, which is the foundation behind raising private money. I mean, it's like we have to know how to talk to people, right? How to build rapport and trust with a complete stranger. Like I can sit here and give you 100 scripts on what to say and what not to say, and I have them. But at the end of the day, the biggest takeaway is just like understand what you're doing, why you're doing it, and be able to articulate the benefits to what we're doing, right? That's like
mhm,
the macro level. But yeah,
mhm.
that's it was on my second deal 10 years ago that I realized I was good at raising private money. And it wasn't until 7 years later that I was like, oh, I guess I'll start a coaching program because people keep asking for help and no one really teaches the money side of it, right? Like they're so focused in on their own niches. But my background's corporate America. I mean, I went to school, went to grad school, and I worked for Dell Computers for 14 years, which I still can't believe.
Isn't that crazy? Like, so those of us who are a bit more, I'll say, seasoned or reached a certain level of age, like I've been working in the food service industry for more than 18 years.
That's
Like,
crazy.
I'm like, am I really that old? I mean, I know my wrinkles say that I'm that old, but I don't feel that old. So it's just interesting.
Isn't that
And then
funny?
how much,
Yeah, like I feel like Dell was 9 lives ago. Like I write about it in my book. Like one of my very first mentors at Dell, who was just a director at the time, he's now like Michael Dell's right-hand man. He's their chief supply chain officer. And it's just like, yeah, I just outsourced. Like when I was at Dell, I just outsourced all of my work because I was good at networking, right? People liked me. And it gave me time to focus on my real estate business. So but I still didn't know what I was doing. Like I hired coaches, mentors. My very first coach was uh I went through Fortune Builders. I don't know if you've heard of them.
I have.
But yeah, like I didn't know what I was doing. They taught me everything from interviewing contractors and analyzing deals and all that stuff. And
Mhm.
now, interestingly enough, now 10 years later, we've talked about collabing on some stuff together again, because that's the missing link, right? To so many educators out there.
Yeah, absolutely. I think that would make sense, especially if you use any of their technical calculators alongside. Because one of the I think the responsible things for us to do, especially if we're taking money from private money sources, however that looks, like,
Mhm.
is making sure that they also understand what they're getting themselves into and what do these offerings look like. Like they
Yeah,
should be responsible enough to have due diligence. So if we have the tools to provide to our private money lenders, at least I feel like I could sleep at night knowing that they had all the information and all the
right.
ability just as I do. So yeah.
So I just hung up. I was on a Zoom with a brand new private money lender right before you and I hopped on here. And he's very conservative. His
Hmm.
background is Indian. comes from the tech industry out in California. Super nice guy, but like very different conversation with him than some of my other private money lenders. And what I was doing on that Zoom with him was I was taking him through I have like my cost benefit analysis, my deal analyzer, whatever you call it, right? So I took him through and I showed him every single cost variable. So to those of you watching, like that's a credibility piece, right? Your target market, your team of experts, the way you analyze deals. And I took him through all that and I showed him our projected profit on a deal we're flipping in San Diego right now. And a lot of investors will ask me, they're like, why are you showing your private money lender your projected profit? Aren't they going to want a bigger cut? And I'm like, no, it just gives them another layer of confidence in me and like, and that I know what I'm doing, right? And like, hopefully the worst of it is I just make a smaller profit, right? And they still get paid back. So there's so many things that we want to use to position ourselves as polished professionals, right? As we talk to these individuals.
Yeah. And I will tell you, with the market sort of doing what it did the last year, or a year and a half, I should say, it really tested me. It
Yeah.
really tested me and it tested my whether or not I was going to hold my end of the bargain with my private money lenders.
Yeah.
So if you're okay, I'll share a couple of those.
Yes, please.
Oh my
Because
gosh.
this is real. This is what people
Yeah.
need to hear. Yeah.
This is I had a couple of those moments where it broke me down, and I would say it added more security in my relationship with my husband because I didn't realize how much I was taking on. I was like, um, how much responsibility I was putting on and own pressure, right? So in my family dynamics, like I'm the hunter, right? Like I look for
Yeah.
deals, I'm the one putting things together. And but my husband helps on the operations side. Like today, he was up in an area called Rimrock because we're doing a flip up there, also known as Lake Montezuma. It's like right next to Sedona.
Okay.
To give people some context, we have a property we just bought in Sedona, and we have a flip out in Flagstaff. So we have a lot going on. But he loves being up there, so he actually doesn't mind that he has to get up and drive, an hour and a half, 2 hours out and go check on
Yeah.
our projects. But that's his role in our relationship. He are the GCs doing what they said they're going to do? What are the last minute things? Like he's got to go put a fridge in this property because some miscommunication happened on the measurements and whatever. But this before he really was putting this much effort in our operations, we had a deal in Round Rock, Texas, where I was
Oh, that's so
relying.
close to me.
Yeah,
Yeah.
I thought you were in Illinois.
Well, I was, and then I moved to San Diego, and then I moved to, well, no, I was I was all over Michigan, Austin, Texas, Illinois,
Yeah,
California, I'm in Austin now.
yeah. Well, Round Rock, which is north of
Yeah.
Austin, we bought a property there. The numbers were great. Like the minimum we were supposed to take home was like, 150,000, something crazy.
That is great.
But the market corrected. The market corrected big time and like 20%. So 20% takes you out if your price point
Mhm.
is in the 600,000s, right?
Totally. Was this last year?
Yeah, we bought summer of 22 and we
Yeah,
finally sold
girl.
that property in
Yeah.
February. Yeah. So, again, like that deal, like I had a private money lender. They helped us buy the property. It was a creative deal, but they made up the difference, right? Like
Sure.
we had a subject to, so like an existing mortgage. They supplemented so that we could fix the house up and hold it. And at the end of the day, I lost $55,000 on that project.
Yeah.
But luckily, I had been flipping, I had money in the bank, so a private money lender could count on me to make them whole even
Yeah.
in a scenario like that. And luckily we bought really good despite the loss. Imagine if we hadn't bought that well. Like
Right.
things would be worse. So, anyways, have you come across some examples like that where like holy
Girl.
crap, I have to make this whole and for me, private money lenders is the relationship that matters the most. Like if
Totally.
I walk away with no money, that's okay, so long as I've held my end of the bargain. Um,
Yeah. And I love that you shared that story. You are actually the only other investor who I have encountered in 10 years who has shared that story, because I have a similar story, stories, and I talk about it all the time. And it's like, this is the stuff that people need to hear. Like, we're going to make money, we're going to lose money. And, you know, Ingrid, like what you chose to do with that private money lender, like legally, I'm assuming you structured the deal the right way. You didn't have to pay them back. They made an investment, right?
mhm,
But because you're the kind of person I know you are, it's like you can't sleep at night knowing that you've lost their hard-earned dollars, right? Like for us, once we know how to make money in real estate, it's easy. It's easy to make it back. It's easy to rebuild. It's easy to shift our strategy. And so, yeah, the exact same thing happened to me in 2016 and in 2017. Actually, LaMichael was here all day today. We had a one-day mastermind talking all things real estate. And I was on Redfin looking up these properties in Chicago that I sold for 900,000, 1 million, 1.1, when I should have been selling for 1.2, 1.3, 1.4. They sold last year for 1.6. So I'm like, and I lost $1.4 million. So it's
mhm.
like, yeah, girl, I had to put people on payment plans. I drained my retirement account. I liquidated all my assets. I just kept my primary residence. And still till this day, and it still bothers me, there are less than a handful. I don't know if it's three, maybe three private money lenders who did not get 100% of their principal back. I didn't pay out interest with that type of a loss, but actually some of them I did. But there are two or three who got like 90% back. And still till this day, like it bothers me. And I think I talk about it so much because I probably will just blindside him and call him one day and like pay him back.
Yeah.
Um, but yeah, that also goes back to like, you guys, like, why are you in this business and know what you're doing? Like, none of us should be raising private money if we don't know how to hire contractors. We don't know how to estimate repairs. We don't know how to analyze deals. Like, we don't know how to explain to a private money lender what's in it for you. Like, why
Mhm,
should you invest with Ingrid instead of putting your money in the bank or the stock market, right? So we have to be able to answer the hard questions. Like, what
mhm.
if a deal goes south? Are you going to sign a personal guarantee? So thank you for sharing that story.
Yeah, no, of course, and, it's one of those, and I truly try to listen, like, when people like yourself, and other mentors I've had, like Pace, right? Like, the stories that have had the most impact on me are the ones where there was a lot of adversity, right? Like
Yeah.
Pace, I think he just recently also talked about it on the Chris Crone podcast, but like he had somebody file bankruptcy and he lost like 1 point something million dollars. And in order for him to make up for it, he had to sell like his whole portfolio of like 40 properties or something.
Yeah.
And I was like, wow, that's in my head, I was like, that's 100 times worse than what I'm going through right now. So if Pace can do it, I can do it. So it's like an
Yeah.
inspirational story. And I think it's important for us to share these tough stories because it can and will happen. But how are you going to get up and like dust yourself off and make it right?
Totally.
Mhm.
My sister always said to me, and it's always just stuck with me, and I say this often, it's the tough times that define us, right? So,
Mhm.
yeah, I mean, we as in you and I, like we could have filed bankruptcy, um,
Mhm.
and or, you know, like hid assets, but it's like that's not going to solve the problem. So, always I always tell people who call me and they have a similar experiences. I'm like, just keep your head down. There's one girl I'm working with right now. I'm like, focus on the end result. You're almost there. You see the light at the end of the tunnel. Like, don't throw in the towel. Just get to the finish line. And it's
Yeah.
gonna happen.
There's a quote that I have that I around this time I saw Alex Hermosi to reference him again say this, and he's like, "There's only one way to lose. Don't quit." So like
Yeah.
it's if you don't quit, you're not going to lose. You just got to keep going and figure it out on your way there.
Yeah.
Um, Lauren Parker, who's actually working on her first creative deal, she was supposed to close this week, but the seller has been a little bit tougher to work with. I won't share all the things. This is Lauren's story. Maybe we'll have her on the podcast, but I'm helping her try to get through this deal. What suggestions do you have, Amy, in
Yeah.
terms of what rooms to be in order for you to network with private money lenders?
Yeah, I'm gonna give you that's a great question, Lauren. I'm gonna give you 3 places you can start going to. Um, so okay, so first of all, you guys, like, so many of us, myself included, in the beginning, will think like going to our local RIAs will check mark the networking box. It's not, okay? So
Mm.
maybe it'll serve you in other ways, but for raising private money, I would actually say don't rely on your RIAs. One thing you can do right now is go onto meetup.com. Meetup is so old school, I know, but go to Meetup and do a key term search for entrepreneurs. Any entrepreneurial event you can find within a 45-minute commute of where you live, just go to it. You know, it doesn't matter what industry it is, tech, pharmaceutical, food and beverage, the gaming industry, just go because every entrepreneur has had to raise money. Now,
Mm.
look, a lot of them are going to be like a-holes or they're not going to want to help you. You're going to encounter those people too, but there will be other people who will either potentially want to know more and eventually want to invest, or they'll know somebody, right? So I would say go to Meetup, do a key term search for entrepreneurs and do a key term search for venture capital, angel investors, right? These are people with money. So start to think about where can you put yourself where there are people of influence also, not just money. So another thing you can do is look at your social calendar. When I was living in downtown Chicago with my real estate business, I was single. I had no responsibility. I was probably going out much more than I needed to. And I started to sacrifice, my all-time favorite restaurant or all-time favorite dive bar for high ticket fundraising events. Go spend $400 on a black tie fundraising event. Again, any type of charitable event. Get dressed up by yourself and go because you're putting yourself into an environment where there are people with money. Now there's a strategy, right? We're not going to be like, give me 100,000. So there are things you're going to want to say to them, but that's another strategy is high ticket fundraising events. And then another one is I talk about this often, going onto LinkedIn and doing a key term search for investment bankers. So look for investment bankers, connect with them. They know people with money. And I straight up tell them once they respond and I get them on the phone, I straight up say, hey, thanks so much for actually responding. This is who I am. This is what I do. I'm not here to steal your clients. I'm here to collaborate. So if you have a client who wants to diversify their portfolio and invest in real estate, just send them to me as a referral. I will educate them on everything. And if they end up investing with me, I will pay you a finder's fee. And
What do you
I
think
promise.
about financial planners?
So I used to say that actually.
Mm-hmm.
My experience and some of the students inside of my coaching program have also experienced this as well. Like, suddenly they're just so freaking conservative. And it's like, I don't know if that's compliant with my organization. And I'm like, all right, sir or lady, like, I don't have time for this. Like, I'm not here to tell you how to collect your fee. I know there's a legal way that you can collect a fee in the form of a marketing or consulting service. But hi, Matt. But yeah, like, so that's why I found investment bankers to be much more breezy and creative, right? Same mindset.
Mm-hmm.
And then there was another one. There's so much, you guys. It's like literally the minute you leave your house, put on your networking hat. Everyone you encounter is a prospective private money lender. We all go to events. That's what I was going to say. We all go to events, right? So at events, maybe stop talking about deals you're looking for and start talking about the capital you're raising. And if you don't have a deal yet, pretend like you have a deal, right? Or talk about your team member who's probably got a deal, or your coach or your mentor, your contractor. But as far as events are concerned, start going. Now you can't do this tomorrow, but you can do some research. Like if you guys follow, two of my attorneys are Matt Sorensen and Mark Kohler, and twice a year they host an alternative asset summit. They bring in 200 people, primarily their clients, who have money invested with Matt and Mark in directed IRA. It's a self-directed 401k account or custodian. And there are people with money who are just sitting there learning about the different ways they can invest in things other than the stock market. So start going to those events. They've got another one coming up next year. I don't know when though. I spoke
Mark
at that
just
event.
did one.
He just
I reached
did
out
you
to Mark
go?
and I was like, "Hey, can you be on my podcast?" Because I know
Oh yeah.
his event was for like CPAs and accountants. I think it was
Yeah,
last week in Scottsdale, and I didn't even know he's from here. He's from Arizona.
he's
And so
amazing.
yeah, I just finally started following him on Instagram. He's an incredible source of information. So if you guys, first
Yeah,
of all, make sure you're following Amy Mahjoory on Instagram and wherever else she is. But also Mark Kohler um, has been so much great information online, especially like the whole Transparency Act.
yeah.
Um, and so it was kind of cool.
He's
So
amazing. I mean, I could talk about them for they do everything for me and Sean.
yeah.
But yeah, they're great. And so that's another great place to go, right? Is it's not necessarily a real estate event, but it's an investing event.
Yeah.
So hopefully that
Um,
helps.
For sure. I feel like I need to get the 411 wait, do they say that anymore? Do they say
I don't know.
411
Girl, I don't know. I'm not hip on that stuff, but I think so.
anymore? For those of us raised in the 90s, the
Right.
411 was the number you used to call to figure out what was happening in in your area. But anywho, um, one of the things that I was thinking is like those more tangent events, like where maybe they're the events are not necessarily exactly in real estate, but it would be of people who
Mhm.
are next to it, right? Like you said, like I really considered going to Mark Kohler's thing last week. I'm like, oh, a whole bunch of CPAs and accountants, they should know who I am in case they need to go and depreciate anything for their clients, and then I would
Yeah.
be of service to them.
Anything you can do with those guys, I would say do it.
Yeah, for sure. Now, do you only raise capital for real estate related stuff, or
Yeah.
are you starting to like start like I don't know, when I hear stuff that is beyond that, like when you have like startups or you have other sort of ventures, is that something you're starting to dabble in or consider?
No, and that's I get that. People tell me all the time, "Why aren't you teaching all entrepreneurs?" Um, you know what? That's my it's not even an insecurity. It's like all I know is real estate. And I was actually talking to my sister about this because she's starting an app and she's like, "How can I raise money?" I'm like, "I don't know." She's like, "Don't you teach it?" And I said, "Yeah, actually, it's all just networking. So I can show other entrepreneurs how to network and build relationships. The only thing I can't do, which I don't need to, I guess, is teach them how to contractually structure those loan docs, but I guess that's why you have an attorney. But I don't, but I guess I can, but I'm not planning on it.
Yeah, I had one of my mentors who was my boss in a corporate job I used to have, he actually started a software company. He exited it and, became a multimillionaire selling it. So he's actually one of my private money lenders.
Oh, perfect.
But he was talking to me about angel investing and something called a safe note, I think. I don't recall anymore. But to your point, it seems like the business side or the business world, the way that they would secure loans is obviously different than if you
Yeah.
have like a very publicly available asset like a home or a multifamily space or commercial space. So that's interesting. But I do think it's like I always say real estate is the gateway to entrepreneurship where you can
Mhm.
start doing other businesses like where I house out of in this building next door. One of my flipping partners, Stephen Hunt, he decided to start up a property management company because it just made sense
Yeah.
based on all the stuff that we were involved in. But that is also like a startup and how do you get going? So I I think that he would benefit in knowing like, okay, how do you make that work? How do you raise capital for something like that? Um,
Yeah. I mean, I maybe I should just try it, right? It might be fear. I don't know. But it's like you can still reach out to investment bankers, right? Because
mhm.
I guess it's the same networking, just yeah, just different contracts.
All right, Matt has a question. Amy, how many projects should one syndicate first before getting enough experience to have a fund?
It's a great question, Matt. It's good to see you again. My opinion may be very different than others. So for me, I really believe in the power of your team.
Mhm.
And so, like, Matt, if you're really good at raising money or like you just want to focus on raising money and you know you want to start a fund, just go straight to starting your fund. Call Nick McGrew, get a securities attorney to do all the paperwork. Whether you do or don't have a partner, and then you can even work with your attorney on coming up with the offer. But like, if that's what you want to do, I would say just start doing that. Like, I don't think you need to have experience, depending on what you want to do with your fund, actually. But I would just focus on that.
Do you have a fund that you work to raise through?
No, I thought about that. I'm very, I have like a very OCD weird brain, and I started out flipping single family homes, and I still flip single family homes. I love that. Venus talked to me about getting into multifamily. I don't want to. I know there's a ton of potential I have just no interest. And so for me, I don't need to start a fund because I just get one or two private money lenders and I just secure them per deal. So
Mhm.
a fund just doesn't make sense for me. Um, it might change though in 2024. So
Yeah.
it's not.
Especially since so many, like, multifamily properties are sort of in hot water, right? Like, if you guys
Yeah.
don't know that, a lot of multifamily, notes are coming due because they started those notes during the time that the rates were really good, and if they
Yeah.
didn't get long-term hold, many of them have, like, a 5-year hold, and so they're coming due, and many people see blood in the water and like, "Hey, we're gonna buy up these multifamily opportunities."
Yeah.
So
There's so much you can do. Like Matt, if you're still with us, I mean, let me know what it's for, because there are like even people inside of our group who start funds just to like be their own hard money lender and like
Mhm,
broker multiple deals, right? So
mhm.
I guess it depends on what you want to use the fund for. But if you know you want to start a fund, then just start a fund. As long as
Yeah,
you have deal flow, because you don't want to start raising money and putting it in the fund, and now you have to pay distributions and like you don't have anywhere to put the money.
yeah, yeah. Actually, that's kind of I feel like a good intermediary or something that at least gets you started. One of the things that I actually considered doing, but I didn't pursue, and I actually think it was more of an insecurity more than anything else, was to start the fund,
Okay.
with Vina, because
Yeah.
Nick, her attorney, was at one of the masterminds that I went to, and they're like, "Yeah, funding a fund, it's less pressure. Like you're raising maybe 100,000, or like I think that was the minimum, but the goal should be to raise 2 to 300,000 because people who commit verbally may not actually go through with it and actually
Yeah.
give the fund or give the money into it. But that might be a good, stepping stone into starting a fund because
Yeah.
it's proof of concept, right?
Yeah, so I don't know anything about that. I was talking to actually Al Dominguez, because he did that with Pauline and Caroline. And I thought he said, I could be wrong, you guys. I do not know this stuff, but I thought he said like when you do a fund to fund, you still have to maintain some level of responsibility and like um action items, which I'm like, I don't want to do. So I'm
Mhm.
sure your attorney will define that for you, but a part of me is like, that just sounds like more work. Um,
Yeah,
it just depends on what your investment strategy is.
yeah. So let's go back to your private money raising then, because what I heard you say is, and we talked about this, right? Stay in your niche, and if that's the thing
Yeah.
that's giving you all the fruit, well, why mess around with something that's working? As far as what are some of the fundamentals that it's important for every private money lender or anybody considering to lend that is a part of the equation that with who you're lending to?
Oh, that's like, such a hard question. I'm going to give you the Amy answer because so I teach both sides of it. I teach raising money, but I also teach lending money. And when you're lending money, you're wearing a totally different hat. So like, for
Mhm.
example, when I raise money and when I teach people to raise money, one example is I'll say, hey, only offer a 12% annualized return and only offer, and this is the big only though, um, the contracts are going to be a promissory note, the deed of trust, and then the insurance certificate. Whereas if I were lending money, then I don't care that you're offering 12%. I want 12 and 2. And I don't care about your 3 contracts. We're going to add a personal guarantee, right? So my standard process is a personal guarantee. So it goes, you can debate it both ways. But for people who are private money lenders or who want to be private money lenders, that's what I would say. I would say require a personal guarantee. I really don't care. I just lent on a deal today, actually, in second lien position. I don't care if I'm in first or second lien because I know how to analyze deals, right? So as a private money lender, make sure you understand the numbers. You don't have to be a real estate investor, but make the person who you're investing with potentially, I would get on a recorded Zoom, have them break down their deal and all the numbers with you, then send you a copy of the Zoom recording so you can go back, look at it, make sure you understand it. And in a way, you're underwriting the deal yourself, right? Like, don't take their word on the after repair value. Make them show you the CMA, not just comps, but a full-blown detailed CMA. If they're brand new, I'm not saying don't lend to new investors. If they're brand new, be like, awesome, you sound amazing. I'd love to talk to your general contractor. Right? Start vetting them. And there are ways you can position that so it doesn't sound like you're micromanaging them, right? Or that you don't trust them. It can come from a place of like excitement. This is awesome. I can't wait to work with you. I'd love to meet your general contractor. Maybe I'll fly out. We'll go to dinner. So those are just a few things you can do if you're considering or if you are a private money lender.
Yeah, absolutely. And get to like, I was telling somebody that I won't lend money unless I've known you for at least a year.
Okay.
Why? Because I want to know like your story. I want to know like out because throughout that year, I want to know like what stress have you had? Like how do you operate with stress? Like what does that look like in your life? And will I still matter as the lender, right? Like I recently put money into a deal in Fresno. I've never actually invested in California until this very first deal. But because now I invested in California, somebody else actually gave me an opportunity to work with them in their deal in San Diego because they're like, I don't want to work with anybody who hasn't done a deal in California. I was like, oh shit, I just did a deal in California. Now I get to work with them. Right. So it did open more doors for me. But the person I'm talking about is Noah Hoffman. And he's already done some reels about this. But I've never done a deal in Fresno. I've never done a deal in California. And I actually helped put the deal together. I was telling him, I was like, I should have asked for more,
A
but I wanted the
fee,
experience
yeah.
more than anything. I wanted
That's
the
worth
experience
it.
in California. Yeah, yeah, for
Yeah,
sure. But I agree with you. I think that that's a smart thing to do. So what you heard Amy say is like, make sure you get it in recording. That way everybody's intention is clear. Sometimes what we
yeah,
put in writing, the text does not read in the way that we intended something to happen. I also think that in a fluctuating market like we have been in the last year or two, we have to understand that when we're lending, it's a risk. Not
yeah.
and that everything is not everything, sorry, like I had a private money lender who was going to lend me on a deal in Sedona. And oh my God, I felt like I was put through the ringer, like big, big time. I even changed my numbers to give him more of a payoff because I really wanted to like, add more to my
Yeah,
catalog
that's
of
so
private money
nice of
lenders.
you.
Well, I also know that they're trying to build out a portfolio of lending notes for their autistic son. So
Mm,
like I was like, oh well, that's a really great story, and it makes me feel good that
yeah,
I'm helping support their mission for their son. But it
mm,
was so difficult, and in the end, like it just wasn't going to work out. And I called another private money lender that I already had a relationship with. And within 3 minutes, she's like, yeah, send me the wiring instructions.
yeah,
I was like, this guy over here, I took like, I don't know, at least 4 hours in terms of
yeah,
how many times I had conversations, all the back and forth that we did. And then there's so much to be said to building really great relationships
totally.
and building that credibility and just being able to like one call 30 seconds later.
Yeah, and that's how it should be. That's why we never stop looking for money. We never stop looking for deals. We never stop looking for money. We always say our job as the investor, as the business owner, is to do two things: find and fund deals. That's it. It doesn't matter how good you have it. Once we have enough money coming in for our own deals, then start parking it into other people's deals. Start taking equity, right? Become their capital partner. It's like everyone needs money. I don't care who you are. Everybody will give you equity in their deals if you can come to the table with enough money. So,
Yeah.
and then you're going to have these different types of personalities, right? So the ones who will just lend in a second, and others who it took me 2 years to convert these um two guys from China to finally invest with me. Like, and others just want to do the deal on a handshake, which never do that. You guys still treat it like a business. But I'm glad you had that Rolodex that you could reach out to.
Yeah. Another older reference with the Rolodex. But yeah, guys, it was
Yeah.
in my contacts list. But anyway.
Thanks, Ingrid. No, I'm kidding.
For sure. But so what are you working on right now? Are you flipping? I know that the market's kind of pushed some flippers out. I can't believe I'm doing 3 flips right now. Like it I was kind of reserved this past year, and then in my brain I keep saying home runs only. And I got what I feel are 3 home runs that we're
Yeah.
working on.
But that's amazing. And again, something that might actually, this isn't very different. You probably heard this before from a lot of other investors out there is it we make our money when we buy and we realize our profits when we sell. So as long as we buy right, it doesn't matter if there's an economic downturn, a recession. Like, I don't even know like what's happening in the world, politics. Like, I don't care. It doesn't impact our business. It just impacts minor adjustments in our strategy, right? So you might have to buy a little lower, or you might have to switch into a different target market. So right now I'm doing flips in San Diego and in Phoenix. I'm not planning to do any more in Austin. I have 2 in Austin, 2 new builds, which I will no longer be doing, I don't think. And so I just want to focus on those 2 markets. I've got 2 partners who I really love in those 2 markets. And
Mhm. So is
then
that
I've
what
got
you do? Like you create partnerships with existing folks, and you're like, let's do some.
no, yeah. I mean, I flipped by myself for 10 years. So number one is being a mom. So I work 25 hours a week. I'm very transparent about this.
Mhm.
My day doesn't start until 11. Well, it's all personal stuff until 11, and then I'm done by 4. I never even said that to you. Like, Emma's running around right now. I normally actually don't do anything after 4 because it's just like family time.
Mhm.
And I'm good with that. Like, I flipped for 10 years. I'm still flipping, but my biggest thing now is being a mom. And then number 2 is RPM, right? So my mentorship, my community, and just raising awareness and having a bigger impact and showing people that they can do it. Like, I'm a product of coaching, right? So it's like, it's so crazy when I just shared a couple of like testimonials that came in randomly yesterday, I think on Instagram. And I'm like, that's so weird. Like, when people tell me I changed their lives, I'm like, that's so weird, but it's so fulfilling, right? And
Mhm.
so I've been so scared, actually, I've been so scared to have a wider reach because I'm so protective of my community. Like, it's 400 people all over the world, which is crazy, but I know everyone by name. It's so tight knit. We've got each other's backs. There aren't any assholes in the group, So it's like, I finally agreed, like, I want to have a bigger impact, which means our community is probably going to grow. So how do we still keep it intimate? So that's number 2 for me. And then number 3 is my own deal flow. And I did all the marketing for leads and all that stuff. So I don't do it anymore. So my 2 partners bring me deals. And if it looks great and fits my deal analyzer, then I raise the capital, I do investor relations, and then they manage the day-to-day operation. But I'm not, and this is a strategy I teach, right? But it's like, I get phone calls all the time from randoms being like, "Will you raise money for me?" And I'm like, "No, I don't even know who you are." Like, so kind of like you, Ingrid, it's like we should all have expectations of
Mhm.
who we're ever going to choose to partner with.
Yeah. Like, what are your boundaries?
Yeah, exactly.
What is gonna help you sleep at night knowing that you've done everything you could? Like, there will still be some folks out there, I think, that, maybe have some malicious intent,
Yeah,
but that's why I feel like my 1 year requirement,
yeah,
like, will I own a property with you? Will we like how often do we interact? Like, is this a mutual beneficial relationship? Those are all things that I think about because I want to make sure that whoever it's a marriage at the end of the day.
Yeah,
And
totally. And like you
mhm,
want this to be fun, right? Your private money lenders or investors, if you're a private money lender, end up becoming your friends, your family. Like you go on vacations together. So it's like, I don't want a bully. I don't want an a-hole on both sides of it. And removing the money side from it, you guys, no, don't ever partner with somebody on any part of your business just because you met someone cool at an event or this person's your friend or family member. Like, really think about who you're going to partner with and why. As far as I'm concerned, nobody needs a partner. But it's like, unless they bring something unique and of value to the table, then don't partner with them. Because I've
exactly.
seen so many partnerships go south because they were just established for the wrong reasons to begin with.
Yeah, for sure. Nobody needs those one night stands. We
Yeah, girl. In more than one way.
Yeah. Well, and what's interesting, you came from a corporate world and so did I. And one of the things that that I was very prideful of is that I have had very strong retention numbers. So like when people work for me, they don't leave, right? And like I was I think number 2 in our building, second to like the CPA person. I'm like, okay, well accountants they never leave. They stick to their their jobs. But anywho, and I feel like that's what I've brought over into my investing side that like I want people to feel valued. I want to feel valued. And so it's important to have that camaraderie. And I would say now I'm focused on a lot more of the fun, Amy, because like I feel like this is like the second part of my career. Like, and I want to be in business with people who make me laugh and I have fun and then I learn
Yeah.
from like my friend Stephen Hunt, he was teaching me this new method, which I'm calling his method, the Hunt method, where you can secure somebody's private money to the LLC, um, either temporarily or for long term, because of what you can do with the underlying mortgage or refinancing a property that could look free and clear, right? Where like we
Yeah.
just started talking about all these different methods, and I was like, wow, like you're really making me think bigger. So,
Well, I love hearing that. And I feel like that also eventually comes with like experience and time um there's just so much that we need to do as brand new real estate investors and it's like we're wearing 1,000 hats
mhm.
um I was just telling someone the other day, like he wanted help like systematizing parts of his business. And the very first book I ever read as a brand new real estate investor was The E-Myth by Michael Gerber.
Mhm.
So for anyone else out there struggling with like your business model or how to set up the foundation of your business, either get The E-Myth by Michael Gerber or The E-Myth for Real Estate Investors, which my mentor, Than Merrill, co-wrote with Michael Gerber. I think that's probably more relative to us.
Oh, I
Um,
didn't know that there was another version. I did read the E-Myth, but I'm gonna have to read that one too. Yeah,
it's
I
right
always say like the fundamentals. Oh, that's mom duty calling right there.
No, I grabbed the book.
Oh, you grabbed the book.
So
I
this is
thought
the
you said
E-Myth,
okay.
and then the E-Myth for real estate investors.
Oh, okay. Oh,
Pardon my
super.
nails are so ghetto. Sorry, I gotta get them done tomorrow. But yeah, so
Look
the
at this.
E-Myth
No nail polish.
the E-Myth for real estate investors. Like I was reading this book and laughing out loud. For any of you who know Than Merrill, like it's his personality just shines through in this book. Um, I should probably read it again, actually. Anyways, I hate
Yeah.
reading, but these two books I read. So
I think the two fundamentals when you're starting to think more like a business person is the E-Myth and then also Profit First by
oh yeah.
Michael McCallowicz.
Mhm.
Um, I actually liked the original version of nonprofit more than I like the investor version because it's the story is so much better. I remember I avoided reading that book forever because I was like, oh, it's a business book. But the nonprofit or excuse me, profit first, it was so good. Like I cried, I laughed, and I learned. Like
So I
that's
never
how
read it, but I've heard great
no.
things.
Oh, listen to it. It's on Audible too, I
We
think, but
actually
yeah,
may have it.
the book is so easy to read. I think I read it in one day, and I'm not a
Oh,
reader. I'm like a slow reader. Like, when I'm reading
yeah.
a page, it takes me like a good 20 minutes. Like,
Yeah.
yeah. So, it's really good. So, Amy, when you think about, what are some of, like, maybe the fundamental, like, or I don't wanna say fundamental, like, what are some good feedback that, or, like, some things you wish somebody would have let you know from the get-go around raising private money?
Around rate, that's so hard because let me think about it from an
Well, like, for
outsider's
me,
perspective.
I wish I would have known, and I'm working on this still, or at least taken off the scarcity mindset. Like, a lot of people have a lot of money and you don't even know. And it's not even like a lot of money. It could, like, a good 30, $40,000 will
Yeah.
help you on a deal. But
So,
in my head, I'm
yeah.
like, you have to be a millionaire. It's like, no, not really.
Yeah, so, now I've got clarity, thank you. So the number one reason why everybody in this country is not acting as a private money lender, assuming they're in a position to do so, is because they're just not educated on the process, right? So educate yourselves because with education comes knowledge and confidence, and then use that to go educate everyone on all the amazing investment opportunities that you have because people can leverage credit cards, lines of credit, they can liquidate stuff from the stock market, health savings accounts, life insurance policies, HELOCs, right? Business lines of credit, personal lines of credit. They don't just have to have a bunch of cash sitting around collecting dust. There's so many ways, self-directed Roths, self-directed 401ks, that they can invest in real estate that they just don't know about. Like, and some may even just have 10 grand. Okay, fine. That can be an earnest money deposit, right? There's a lot that they can do. It can be transactional funding on a wholesale deal if it's got to be a short-term loan. So understand why you're doing it, what the benefits are to private money lending, what's in it for us, what's in it for them, and then go just teach people so that they start to invest with you.
Yeah. So Kiran asked a question, and nice to see you, Kiran. It's been a while. I think he was a mastermind student of PACES. Is there a template that you use to present to a potential private lender?
I don't have a template. I have several different presentations and like pitch decks that I use, and it just depends on who they are. Like I've got some that are tailored just for like hedge fund managers and investment bankers straight out of Wall Street. So it's much more high level versus like my mailman or my neighbor, right? Who doesn't even know what a real estate investor is.
Mm,
So the first thing I would do, Kieran, is um, take these 4 bullet points I'm going to give you and create your own private money presentation. It's going to be who are you and what do you do? It's number 1. So basically your bio. Number 2 is what's in it for us? Why do investors like us leverage other people's money? So what are our benefits? Number 3 is what's in it for them? What's in it for the private money lender? Why should they invest with us? And then number 4 is the call to action, which is basically so that's just a very high level of who I am and what I do. And if you want to know more, great. And if not, no pressure. It's literally that. Like it's no org chart, it's no numbers. You're not going through deals. Like that's gonna scare them away. There's a strategy and a system to raising private money. And it starts with just a very high level overview of what that process looks like.
Okay, I heard you say number one, who are you? Number two, the investor benefits. So, like, why is it beneficial to you? Hi. Number three, why should a PML care? And then I missed the fourth piece.
Number 4 is just the call to action. So,
Ah,
what do you want to know more? Yes or no? If not, no pressure.
mm. What is this little sweetheart's name?
What's your name?
Oh, hi.
Mama.
Emma? That's such a pretty name. I love your bow. Are you gonna do you help your
Thank
mom?
you.
Yeah? I mean, who wouldn't give you
It's
money
really
with
a
somebody so cute with you?
microphone, mommy.
Yes, it's a real microphone. Emma, I'm actually in the middle of an interview, so
That's okay. Emma, so what do you do when your mom hangs out with you in the afternoons?
Mm.
oh, honey, answer the
Yeah?
question. You're on a video conference.
How old are you, Emma? You're 4? Oh my goodness. So soon you'll be able to use your whole hand.
Almost
That's
got it.
cool. Very cute.
It's
How
nice
how
to meet
many
you.
how many brothers and sisters do you have? Or is it just you?
Mhm.
Yeah?
That's Emma.
Tell your mom, let's have some more. I'm just
Oh,
kidding.
Ingrid, you're funny. Um,
By the
okay,
way,
so
my kids are 16 and 14,
wow.
and my husband and I very intentionally only had the 2 kids, and we've been crying for this past, like, literally crying. We're like, "Why didn't we have more?" So just so you know. Yeah.
That's funny.
Consider it, consider
Emma
it.
gets all of our love.
That's awesome. I know we're almost at the top of the hour, and obviously you're a working mama. And by the way, I didn't get to reinforce what you said. I love that you have set boundaries, that you know clearly what your priorities are. And of course, who would want to prioritize a sweet girl like Emma? And I love that because I actually have a lot more respect for those of us or in the entrepreneurial world who can set those clear boundaries and know what matters to them. Again, it could be whatever matters to you. If it's raising kids, if it's out, clubbing, whatever it is, if you
Right.
can make it work, then that's awesome. And it's actually something I have to work on. I'm very much a workaholic. So
Oh, yeah. Girl, I'll
yeah,
help you with that. Thank you.
yeah. Well, where could people find you, connect
Bye
with you?
bye.
Okay.
uh,
So to a fault, I'm addicted to Instagram. I'm on there all the time, you guys. I do have someone who helps me, a content creator, but I respond to all my DMs. So if you guys ever have questions, send me a DM. I will respond probably within 24 hours. Or you can just check out my website at amymahjoory.com.
And then are you an active buyer then? Or I think I heard you say San Diego, not really focused on Austin,
I
and then where
said
else?
bye.
Yeah, no, just San Diego and Phoenix. And all those deals start with my partners, and then they'll send them to me if it meets our preliminary criteria. So if anyone has anything, let me know. I can send it to Melissa.
Cool. So single
Yeah.
family homes in Phoenix or San Diego, and it first starts with your partners.
Yes.
Very cool.
Or in San Diego, we do like ground up construction too on like up to like 10 unit condo new builds or apartment buildings.
Oh, very cool. Well, I assume you're probably going to start taking advantage of all the ADU laws they just passed. So
Oh yeah. So that's out of my jurisdiction. I rely on Melissa for all of that. I'm like, girl, can we do it or not? I don't need all the details.
very cool. Well, we'll let you get to Emma, and we appreciate you so much for being on the podcast.
Thank
And
you.
hopefully we get to have you back.
Yeah, thank you so much. Appreciate you. Appreciate everyone who joined us today. Great questions, you guys. Please always feel free to follow up and let me know how I can help, and we'll talk soon.
All right. Thanks, everybody. Remember that we're here every Wednesday from 4 p.m. to 5 p.m. Arizona time. And we will be focusing more on how do you get started in real estate so you guys can have a very successful 2024.
Thanks,
Bye.
Fred. Bye.